As of this exact moment on Monday, December 22nd, 2025, Sidus Space Inc., trading under the ticker SIDU on the Nasdaq, is currently sitting at $2.14 USD, which represents a staggering intraday surge of over 84% from its previous close. This price action isn't just a minor blip on the radar or a random retail-driven squeeze. It is the market reacting in real time to news that has fundamentally altered the valuation floor for this small-cap space player. While most traders were looking at the usual suspects like Nvidia stock or checking their Robinhood app for movements in big tech, Sidus Space quietly dropped a bombshell. They have been named as one of the contract awardees under the Missile Defense Agency's SHIELD program. We are talking about an indefinite delivery, indefinite quantity contract vehicle with a total ceiling of $151 billion. The sheer scale of that number compared to the company's tiny market capitalization earlier this morning is exactly why we are seeing this vertical move. It is a moment where the expectation of Sidus as a struggling penny stock has collided head-on with the reality of it becoming a verified partner in national defense infrastructure. The expectation from the broader market for a long time has been that Sidus Space was simply another speculative satellite play, perhaps a company that might eventually find a niche, but would likely struggle with the high capital expenditures required for space operations. Most people looking for an online investment or using investing sites to find the next big thing usually bypass names like SIDU in favor of more established players. But the reality we are seeing today is that Sidus has successfully positioned itself within the Golden Dome missile defense strategy. This isn't just about launching a few satellites, it is about providing integrated technologies that support a layered defense against air, missile, space, and even cyber threats. When you see a stock jump 80% in a single session, the natural instinct for many is to think they missed the boat. However, the deeper insight here is that this contract award gives Sidus a seat at the table for the next several years. It validates their vertical integration model, where they handle everything from 3D printing satellite buses to managing AI-driven data in orbit. This is a massive leap from being a subcontractor to being a direct awardee on a program with a $151 billion ceiling. If you are managing your own individual brokerage account or using something like Schwab Intelligent Portfolios, you know that finding these inflection points is the hardest part of self-investing. The move in Sidus today is backed by massive trading volume, which is currently running at nearly 30 times its daily average. This indicates that institutional players and high-frequency algorithms are aggressive buyers at these levels, not just retail traders on a Robinhood stock trading spree. We are seeing a complete repricing of the risk-to-reward ratio for this company. Earlier this month, the narrative was centered around the successful bus-level commissioning of their LizzieSat-3 satellite. That was a technical win, but today's news is a commercial and strategic win. The market is now realizing that Sidus isn't just a manufacturer, they are a data and defense service provider. This shift in perception is what drives sustainable momentum. While some might be distracted by the latest fluctuations in Apple stock or Tesla stock, the real action for small cap seekers is happening in this corner of the aerospace sector. Comment below how many shares of Sidus Space you currently hold, or if you are looking to enter a position after this massive news. When we look at the recent stock movement, it is clear that the momentum had been building even before today's announcement. Over the past week, Sidus had already shown a decent return, but this morning's gap up and subsequent hold above the $2 mark suggests a new level of support is being established. Investors who use Interactive Brokers or the Fidelity Trading platform for their online investing have likely noticed the increased volatility alerts. It is important to note that despite this massive percentage gain, the company's market cap is still relatively modest at around $75 to $80 million. When you compare that to a contract vehicle with a $151 billion ceiling, you start to see why the bulls are so excited. Of course, Sidus won't get all of that $151 billion, but the ability to bid on on task orders within that framework is a massive tailwind. This is the kind of development that changes the fundamental profile of a company from a speculative maybe to a legitimate defense contractor. The reality of the situation, though, is that Sidus still faces some of the classic challenges of a growing space company. Their recent financial reports showed negative gross margins and a need for consistent capital to fund the expansion of their LizzieSat constellation. They recently raised some funds through an at-the-market offering and a registered direct offering in November, which helped shore up the balance sheet. For those using the Robinhood app or SoFi investing platforms, these capital raises are often seen as a negative due to dilution. However, in the context of today's contract award, that extra cash looks more like a necessary investment to prepare for the increased demand that the SHIELD program is likely to bring. The 35,000 square foot facility on Florida's Space Coast is now more than just a workshop. It is a critical asset for delivering on these high-stakes government requirements. Let's talk about what Sidus Space actually does for those who might be seeing the ticker for the first time. They operate on a space-as-a-service model. Their proprietary LizzieSat platform is designed to be multi-mission, meaning it can carry different payloads for different customers simultaneously. Think of it like a ride-sharing service for sensors and data collectors in orbit. They use 3D printing for satellite parts, which speeds up the manufacturing process significantly. Their AI platform, known as Orlith, allows for data to be processed right there on the satellite rather than having to send raw data back to Earth for analysis. This reduces latency, which is crucial for defense applications like the ones mentioned in the MDA contract. For a user on Interactive Brokers or looking for investment help through Fidelity Wealth Management, understanding this technical edge is key. It is not just about being in space, it is about being smarter while you are up there. The broader sector momentum is worth watching too. Other space stocks like Rocket Lab or Intuitive Machines have seen their own rallies recently, suggesting that the space economy is finally starting to mature in the eyes of investors. Whether you're using the SoFi active investing tools or a more traditional Fidelity brokerage account, the trend is hard to ignore. For a long time, space was seen as too expensive and too risky for anyone but the government or billionaires, but companies like Sidus are proving that a more agile, cost-effective approach can work. They have demonstrated space heritage with multiple successful launches, and that track record is what ultimately allowed them to win a spot on the SHIELD IDIQ. The MDA isn't going to hand out spots on a $151 billion contract to companies that haven't proven they can actually get hardware into orbit and keep it running. Looking at the future outlook, there are several catalysts on the horizon for Sidus. They have LizzieSat 4 and LizzieSat 5 in the pipeline, with LizzieSat 5 specifically focused on a Pathfinder mission for in-space data storage with Lone Star Data Holdings. This expands their reach into cislunar space and the Moon, which is another area of intense interest for the defense community. If they can continue to hit these operational milestones while winning task orders under the SHIELD program, the current price of $2.14 might eventually look like an entry point rather than a peak. Of course, the risk is always there. Small cap stocks are notoriously volatile, and the expectation of future revenue from a contract award must eventually meet the reality of actual earnings in the quarterly reports. Investors using the Robinhood mobile app or checking their SoFi ETFs need to keep a close eye on the execution. If you are a self-directed investor who handles your own investment through an individual brokerage account, you should be considering how this fits into a broader portfolio. Maybe you have your safe bets in Fidelity mutual funds or low-cost Fidelity ETFs, but you keep a small portion for high-growth opportunities like Sidus. This is where the tension between expectation and reality becomes your best friend. The market expected Sidus to be a bit player. The The reality is that they are now part of the Golden Dome strategy. That gap is where the profit lives. But remember, the volatility we are seeing today works both ways. A stock that can go up 80% on news can also pull back quickly as early investors take profits. That's why using advanced tools like the Interactive Brokers platform or the Robinhood fractional shares feature can be helpful for managing entry and exit points without overcommitting capital all at once. In summary, Sidus Space has completely shifted the narrative today. We started the day with a stock that was struggling to stay relevant in a crowded sector, and we are ending the session with a company that is officially a player in the $151 billion defense market. The move to $2.14 is a clear signal that the market is finally beginning to value the technical and strategic foundation that Carol Craig and her team have built on the Space Coast. The contrast between what people thought this company was and what it has proven to be today is the definition of a breakout. While the road ahead will surely have its share of challenges, especially regarding the scaling of production and managing cash flow, the SHIELD contract award provides a level of validation that is hard to overstate. It provides a long-term framework for growth and a potential stream of high-value task orders that could sustain the company for years. As you